Good afternoon students, class 11 student. So today in this video we will understand about the types of accounts. This is the second thing that very important after the rules of debit and credit. Understood? So this will help in generalization. Understood? So why we need of types of accounts? Because whenever we record the transaction in journal, so that help in recording in systematic manner. Okay? So these accounting rules are called golden rule of accounting. Understood beta? So what are the accounts? So if we talk about the types of accounts, so personal account, impersonal account. So in personal account also three types: natural person, artificial person and representative personal account. Impersonal accounts are the two types: real and nominal accounts. Okay beta? Personal is natural, artificial and representative. Impersonal is real and nominal account. So in short, broadly we have categorized that account: real, personal, real and nominal in three types. So these are very easy to understand. Okay beta? So the first one is personal account. What is? Accounts which relates to persons, individual, firm, company, debtors, creditors. If it is related to these, so these types of account is called personal account. Understood beta? So personal account is also three types: natural person, artificial person and representative. Accounts relate to human being like Joseph, Alex, Ram, Mohan, Shyam's account. Artificial accounts related to business entity. Understood? Like company's account, X Limited, Y Limited company's account. Representative reflect collective accounts like capital account, drawing account, and these types of account also relate personal account. Understood beta? So these things you will related to personal account. So impersonal account. What is impersonal? Impersonal account which are not personal, such as machinery, cash, rent, etc. These are related to impersonal account. Impersonal account is also two types. The first is real accounts and nominal accounts. Real accounts relate to firm's assets, properties, understood, and possessions. Machinery, cash, investment, fixed deposit, these are the real account. Nominal account, it's belong to income and expenses related to loss and gain. Salary, wages, rent, commission, these are the nominal account examples. Golden rules of accounting. First, I categorize all the accounts in three major categories. So these three major categories are personal, real and nominal. So the rule of the personal account: debit the receiver and credit the giver. Understood? Real account rules are, you remember all the rules because these rules are very important while we are recording the journal transactions. Real account: debit what comes in, credit what goes out. Nominal account: debit all the expenses, losses, and credit all the income and gain. By example we will understand. Example first: business commence with capital. So cash account and capital account. Cash is real account and capital is personal. So according to real account, what comes in will be debited, okay? And credit is the giver, because personal account, giver the receiver the debit and giver the credit. So the entry will pass cash account debit to capital account. Another transaction: purchase machinery worth rupees 10,000. Machinery account will be real account. Cash is the real. So what is the rule of real account? What comes in and what goes out. So debit what comes in, machinery comes in the business. What goes out? Cash goes out from the business. So debit the machine and credit the cash. So entry will pass machinery account debited to cash account. Understood beta? It's very clear. So you should remember the rules of accounts. So next one: purchase goods on credit from Nancy 5,000. So purchase is the nominal account. So debit the expenses. Creditor, personal account. Creditor is a personal account. So credit the giver. So the entry bill passed. Purchase account debited to Nancy. Understood? Because personal purchase is the expenses and Nancy is the personal account. This is, she is a giver. Salary paid. Salary is nominal account and paid by check. So paid by check या paid by cash. So bank account be mentioned here. Cash also we can mention. So cash or bank is a personal account. So bank is a personal account. So credit the giver and debit the expenses because salary is expenses and expenses will be debited. So salary account debit to bank account, the entry will passed. So understood beta? So next transaction. Goods sold 80,000 to David and received check against it. Check मिला है. So in this condition, personal account, bank is personal account, sales is nominal account. So credit the gain and debit the receiver. Personal account rules is debit the receiver, credit the giver. Nominal account rules is all expenses and losses debit, all income and gain credit. So bank account debit to sales account, this entry. Last, dividend received. Dividend received, it is an income. Bank account is a personal account because bank is receiver. Dividend nominal account because it is related to income. So the entry will pass bank account debit to dividend account. Understood beta? So those personal account and nominal account rules will be there. Understood? So by the 6th example you have understood all the things. Okay beta, please like and subscribe the channel. Thank you so much everyone.